Hey, good morning, everybody. This is the professor with Day Trading for Success. So we have an exciting day of a breakout strategy. So stick around for some live trading. I'll be right back.
Welcome to Day Trading for Success, hosted by the professor, a former math teacher, professional trader, and coder for Charles Schwab's Thinkorswim platform. The professor isn't a licensed financial advisor. Always consult a pro before diving into any strategies or demos you see here. Start smart, practice in a simulator, stick to a solid day trading plan, and don't forget to log every trade. Your profits will start with preparation. Thank you for allowing us to share in your journey. Please remember to subscribe, comment, give a thumbs up, and click that notification bell so you can be the first to receive more of our great content.
Hey, welcome back. This morning I have a pretty big group with me again, the same usual suspects. We're in a studio trading live, and we're going to be doing the open strategy from Day Trading Volume 4, the 30-minute range, which they call that the number 2 strategy. And we're going to go over what a breakout really means and why people do that. So first off, let's go in with this layout. So right here, this is a really, really fast layout that I have set up through Thinkorswim. That's what we're trading on today. And it's designed to go very, very quickly. This is a 1-minute chart. It has a couple of custom indicators on here, the momentum indicator and then the scalping indicator. So this momentum indicator is going to tell, it also has the buy-sell oscillator on here. So the momentum indicator is going to be the brown and light aqua arrows, and then the buy-sell oscillator will be green and red arrows. And using the different mathematical formulas that are inside these custom indicators that are used by pros and the prop firms, and we have them here, and I'll have links if you want to get them. You don't have to have them to trade, but they make a big difference in different strategies. So I like to use these two particular ones in this strategy. I like the momentum directional indicator. It works really well with the pre-market and open session, that crossover, telling you when there's about to be a shift in momentum very quickly and which way you should go, especially when you're getting in and out very quickly at the open. So besides just having a breakout range that we're waiting for it to, the price level to break through, we also need to know when to get out and when to get back in again once it's already broken that breakout range if you want to take more than one trade. So we're going to be doing scalping, which is going to be a lot of trades very quickly. Well, maybe not a lot. To trade the open, I trade for only about 15 minutes, and then I move on to do the RV strategy, which is a different strategy. And I'll probably take 2 to 5 trades. We'll be trading 500 shares. We'll only be trading market, and everybody's doing the exact same thing on BABA today. So there is all kinds of ways to figure out whether a stock has the potential for breaking out, and that's in Day Trading Volume 4. I have a link to it. I recommend getting it. You see how the momentum came up, and it said it was going to go up, and then it went up right as it said that. So, and then it went back down. So, I mean, you want to have other levels and indicators to help you trade, and the momentum indicator is going to help me determine mostly when to get out more than to get in once I get into a trade, and that's why I really like that one. And then the scalping indicator, the green are the buyers, the red are the sellers, the blue column is the volume. This is a minute-to-minute, moment-to-moment, within seconds, telling you what's inside these candlesticks. So you get to see what everybody else is doing, and I antiquate it sort of like you're on a wave with a surfboard, and you're waiting as the swell comes in to move that wave, then you jump on that move and then get off quickly. Short-term moves. That's all we're looking for to make big money. Okay. So 1-minute chart, a day chart minimized. This is the active trader. This is our level 2. This is our 15-minute chart. This is a 5-minute chart on a 10-day time increment. Then there's a 5-minute chart on a 2-day. And then I have a 30-minute chart down here to help set our breakout level. So this people wonder, like, when you first start trading, and even when you're a professional, you want to know, like, when do I jump into a stock? When do I know it's the right price to get into a stock, right? So you determine that usually by looking at what is the history of that stock. And then the history of that, you look at the price, and usually price is marked by candlesticks on a chart. So, that's a high price and a low price within one candle. So you kind of look back and you see, are there any patterns that have been developed by that price action? You can see it quicker with candlesticks than writing down prices and say, hey, it hit that price before. So the candlesticks, the chart, it's a really easy way to determine which way, where the price action had formerly been. So when you look at the historical data, we'll call it, because that can be from 1 minute ago to 5 years ago, it's all history, right? So you're looking for patterns where this might repeat itself, and you want to be the lucky one that jumps in right when the pattern's about to repeat itself, right? That's how simple it is. So when you're looking for a, I'll put simple in quotation marks. So now you want to determine, where do I jump in based on that data? There's a lot of historical readings, right? Which is the right level to jump in, right? And that's why people many years ago, traders started to develop what they call breakout ranges. Like, there's enough historical data to say, this is a good breakout range. This is when I see the price break that line I draw, which is a range, I want to get in or get out at that level, right? So you're basically doing that. Now, a whole bunch of professional traders got together a few years ago, and they put out a breakout range book that has all these different formulas of when the best breakout range would be. And that's based on so many professional traders figuring out what they thought the best breakout range is. So rather than trying to figure it out for yourself, just get Day Trading Volume 4 and you can figure it out right in that book. It tells you, and it has volatility ratings that gives you a better idea of that it is going to break out when you're picking your stock, all the different criteria you go for. So I highly recommend that book, and we are using that right now. We're using this one right now. I opened up a page from the book that's been copied here. We're going to be using this 30-minute breakout range. So you mark that at 9 a.m. in the pre-market. There's a candlestick there, so it kind of showed you how to mark it. You're marking the opening and closing of that candle on a 30-minute. And we'll go right down here and show you on a 30-minute chart. So I did that a few minutes ago. So there it is. There's the high and there's the low of our breakout range. So we're waiting for price action to break that before we go in. As you can see, it already did. And then you might wonder, what are all these different levels here? This is on a 30-minute chart, but let's go to a 5-minute chart so you can see. Actually, let's go to the day chart for a second first. So this is showing you our ATR revenue range. So one of the first things you do to get your volatility level to see if it's going to break out is you create a range where the total range you think the stock will move in a day, the high and the low. And the way you do that is you look at the close from the previous day, and you look at the ATR down here, which is every open and closed over a 14-day period, smoothed out to give you an average. Okay, and that average, if I go over this candle, it shows it at $6.0598. So we'll call it $6.06. So you divide that $6.06 by 2, so you get $3.03. And you subtract $3.03 from the close to get a low range, and you add it to get a high range, which is way up here, yeah. So that's the dead center now of that range. So that's just simple math. There is a custom script that does that for you. I'll have a link to it if you don't want to do that math, but you could do it yourself. But that gives you a range. And then within that range, you're going to look for historical data within that range. So you're narrowing down now where to take the trades. You've got a 30-minute close of a candle. Now, we're on the New York Stock Exchange in the East Coast of the United States. So the market opens here at 9:30 a.m. So we marked the 9 a.m. 30-minute candle. I just did it. And that's gonna give us our breakout range. And then the day's action hasn't started yet, so I just was able to take yesterday's close right here and figure out that. So in between there, we want to create other levels. Now that we've got our breakout range marked right there, we want to create other levels of where we think that stock might stop, turn around, pivot. So on the 30-minute, did I actually open the 30-minute yet? There's the range. I marked it. Okay, yeah, I did that earlier, didn't I? So now let's go to the 5-minute, and we'll show you some of the other things they say to do here. So one of the first things you do on this 5-minute is you mark a Fibonacci level. So this is a 5-minute 10-day. Fibonacci levels are always marked left to right. They can be high to low or low to high. In this case, it's low to high, so you look for a low. The book tells you how to do this all, and then you snap the line to the high, and then these levels are going to open up. These are going to be support and resistance levels. It's considered to be nature's mathematical formula, or we might just want to call it our profit pivot levels, our historical data, whatever. They're based on historical data. Then it took it a little bit further to give you a better leg up. So in between our range here, the high and the low here, revenue range, we have two really good support or resistance levels we're going to want to watch once we start trading, right? So that's one of the things that you do. And then you do it again. I have another 5-minute chart, but I'll just show you here. You do it again on a 2-day 5-minute. This one happened to be high to low, so you wouldn't see this other price action. So it was low to high. High to low, and then more support and resistance levels. 1, 2, 3 more opened in between here. So we're going to want to watch those. But more importantly than that, not more importantly, but as is important is, let me just zoom in on this one area here. You want to mark where there's been abrupt turnarounds in price action, or if there's enough cumulative, then you kind of smooth the line in between, so a little bit of subjectiveness in there. But you're marking these levels, and you're going to want to see how they're just marked at very, very levels where you very much would see it makes common sense to mark. Or the fibs already picked them up. See how the fib picked these up perfectly? See how well that was respected? That's not where that line was marked. It opened up to that location. So just to show you how it will respect them as the price action comes across to it. So setting up those Fibonacci levels and then profit pivot levels, it'd be the next thing you'd want to watch. So, and that's usually when the price action turns around. Now, the book explains how to do that, but it's really not rocket science once you get into it. I marked the green ones above it as green and the ones below it as red. So I knew that I could, and the reason I'm doing that is just to help you guys, but also you have to remember that the main part of this strategy is you can only take a long position when you're above the breakout high. And you can only go short when you're below the breakout low. So I can only go long above this and short below that. I can't go long, then short, long, then short, long, then short. If the price action goes up, I can't go short, then long, short, then long, short, then long. Now, you can do it if you want, but this is what the strategy calls for, that you don't do that. So that's one of the things that changed. I remember years ago when they were beta testing this, it was one of the things that just changed the success for traders. Hang on. So Charlie's over here she's handling the chat. So there's a lot of questions going down here right now, but all of us are pretty much used to trading here. This group, although it rotates, it's basically the same faces I see of a few hundred people on a regular basis up here. So now I don't mic up for doing the opening strategy very much, because it seems like a lot of work for like 5 minutes of trading. But so there won't be as many videos with the open strategy, and I usually get a crowd when I want to do it, no problem. Now I'm doing what you call quarterbacking, which is a head trader's job. I've been involved in different things for years, and I would walk around the room and say, take that trade, don't take that trade, get out here, get out there, don't get, look at that level, watch out for this, and then generally just call the trades. Now, I am not responsible for their trades. I am not a licensed financial advisor, as my disclaimer said on the channel, and so everybody here is responsible for their own trades. And I highly recommend that if you're watching this, that you don't just try to emulate what I'm doing. You talk to a licensed financial advisor, but more than anything, if you can get any advisor that says day trade, which you probably can't, if you're going to do it anyway, Trade in a simulator. Absolutely trade in a simulator. Thinkorswim has a great simulator. Most platforms do. You want to make sure it's working for you for a long period of time. Keep track. Remember to log. Log every trade. Log what you were thinking that day. Log what you were thinking at the end of that trade, or at least at the end of your session. Go back and go, relook at what you did and think, go through your thought process so you can get better. I recommend recording your session so you can actually see, and then if you lost money, you can go back and go, why did you take that trade? If you're using the right indicators and you're using a strategy, some strategy that seems to be proven, there's no reason why you can't see the future. You really can see the future. I know that sounds almost nonsensical if you've been struggling, but the indicators are getting better and better and better. You just have to spend a little bit of time to read them. So you'll see that I'll call them, like I can read the future. I'll call them and point out why I'm going in and out of each trade, particularly when I trade the RV strategy. So I highly recommend that you do that you study, trade in a simulator, practice with the right custom scripts. That's what the prop firms have. That's what all the pros do, despite what you might hear differently. Oh, I don't need any indicator. I don't need any support and resistance. I don't need to do any of that stuff. Well, they'd be one of the few traders that I've ever seen that doesn't need something. Now, this is marked up for a specific strategy, so it is a little messier than most. And frankly, when I trade this and I'm not teaching it, I don't usually need to draw these profit pivots. I will make a note of the breakout. Sometimes I don't even need to do that. I usually mark my fibs, though, because I can't really remember those levels. But, as you get better and better in trading, you might not need to mark this up quite as much. But, why not? I mean, it's not in my way. I'm on a 1-minute chart here. I don't find it in my way, and I don't mind showing it for you guys and everybody else to trade. Now, I'm only going to be trading for a few minutes, like I said, so I'm only going to be watching like right here. And I'll be watching a little bit of level 2, but it won't matter too much because I'm going to be following the strategy. So what will I be doing? I'll be looking at the momentum indicator or listening to it. I'll be looking at the profit pivot levels, and then I'll be watching the scalping indicator after the first 2 to 5 minutes. This will become more valuable to me, particularly if I go 10 to 15 minutes in. This is really, really helpful. And with most any other scalping but the open, you're always going to want to have this. And you see me trade with various, I'll also be watching the buy-sell oscillator. Now, the momentum directional is based on EMA 12 crossover, whereas the buy-sell oscillator is a different bit of a formula based on the RSI. So they're both very useful in short-term trades, telling us directions. You can see that arrow was right. This arrow was right. That pops up before this candle starts. This arrow was right. This arrow was right. That arrow was right at first, So, and then it showed the same indicator said, hey, it's going the other way. This arrow was right. So, I mean, so we haven't seen yet if this arrow is going to be right. But if it follows the rest of them, it's like taking candy from a baby. I don't want to make it, that's why I say trade in a sim. I don't want to make it sound too simple. But as you get into open session, these even become more accurate. See how that's accurate? You could have jumped on that trade and made money on that trade. You just saw it, you jumped on it, you got it, and then you got out already. So that whole thing moved down, 10 to 12 cents. So if you had 100 shares, $10 to $12 in one trade. 1,000 shares, now you're having $100 to $120. You have to worry about fills as you go higher in share size. So make sure you have a good relationship with your broker. Make sure that your volume is high enough to handle it. And like right now, I wouldn't want to go in with 500 shares because it would probably take a partial. And I would want to do not market. I would do buy and sell on the limit orders. So we have about 2 minutes till the market opens. And if I miss something in explaining the range, the breakout range, so I'll kind of talk you through it. If it breaks out here, say, the next time I should be looking to get in, if it's up here, this would be my breakout. If it's already broken out, they cover on the book what you do. Then you use the profit pivot levels, which is historical data, as your next breakout range. It's as simple as that. Now you're going to see, and I'm going to call my trades. You're going to see this go crazy in a second because you have all these preset orders. So we don't trade according to the rules, the strategy, the first 1 minute, sometimes 2 minutes of the market open. So we don't trade. So I'll look at the price action to determine. So this is about to go haywire in about 60 seconds. And you'll see it'll be hard to follow. These numbers will be hard to follow everything. People are already starting to jump in. Volume just went up. As you saw, that was 5,000 a minute ago. Now it's 9,000 literally a minute ago. This is a 1 minute chart. Momentum is showing down. It just broke that level. I really want to see what it's at after a minute, though, to make my determination whether to go short or long. And if you've got to follow the PDT rule, you should have a minimum of $25,000 in your account, which means you can margin up to $100,000 in trading. So this is no problem with 500 shares. So it's not because you don't have to play with your money. You can play with their money, which is another great thing. Okay, so there it goes. Broke out right away, went down here. But we don't want to hit this yet because it could be up here in less than 60 seconds. So we need to watch this closely. Now I'm going to look at the market maker, particularly at the open where Thinkorswim has trouble. It seems to be okay, but the spread's a little wonky here. But yeah, in the first 1 minute, you're going to have a really weird spread. Everybody's going, guys. I mean, right now they don't need me to quarterback much because we're following the strategy, so I don't need to call anything. I was about to say, hey, I'm looking to go short. I'm going to go exactly what it tells me to go here. So this breakout is saying it's going, wow. Now, when you look at that 1 minute, sometimes you wonder, like, why didn't I just get in? So I've got to break 136, 134. It has to be below that level. It already is, so yeah, I'm just going to go in, guys. I got it at 136.19, right at just at that level. So I'm going to hold that for a minute and probably get out at the 136. I'm just going to get out there. That's my first trade. I don't know if this is going to turn around, so I'm going to wait for the next breakout level, which is if it keeps going down, I'll get back in at 136. So this is my first trade with $69. With 500 shares, you're not going to get a lot of money here, but we're hoping to get 500 to 1,000 here. So I got out before it went back up and retraced, which is what I thought it might do. Now I'm waiting for the rules say, the strategy says you have to wait for the next candle to open, and it has to be breaking a level to get into it. And it looks like it's going to. So so I'm looking for the 136 even dollar level for it to break. Hasn't done it yet. That's why you don't jump in early. You cannot go long when you're below the breakout. Oh, God, I thought it was breaking. I thought it was it hit at 02 and was going down. So I went in before I was supposed to a little bit there, but I thought I was actually at the one. So that's a good trade. So we'll look at the fib. It hit the fib and I missed it. I'm going to see if it can go back down to that fib. Oh, there it gets all evaporated there. Oh, wow, I'm just going to take that. So 399. Yeah, it hit that fib and below. So now I have to wait for the next candle. Yeah, I could have made more money there for sure. But that's not a bad start in 2 trades, almost $400. So now we have to wait for the next level here to break, which is the fib level. I'm waiting for it to break the fib level going down. If it keeps going down, there it goes. Wow, I missed it. And then I got it again. All right, so I got it at 46 exactly at the fib level. So let's see. I kind of would like to steer clear of continuing to just keep getting out at every single 1 minute, but I mean, it has worked for me so far. So we'll keep it going for now. Now that was a level to take profit in, but I'm going to hold it a little longer. Wow. And I am glad I did. I mean, it seems like it's just making a downward move, so it's a no-brainer. I don't have to, struggle so much. Although I don't want to leave a lot on the table if it, I don't, I'm going to just take that. That's just too much. So I took it at that fib. What did I get it at? I don't know. I'm so used to reversing. Okay, guys, I took profit at the fib. Everybody's out. Nope, there's a few of you still in there. Okay, well, that's $919. I tend to almost want to call it a day, but it seems like that was just I'm not too exhausted, should I say, from that. Now I know these other charts are messy. They don't matter to me. This is all that matters to me right here. I guess I will take a look at this before I take another trade. I don't want to blow what I've got. I've got a nice, I thought it'd be somewhere between 500 to 1,000, so I'm on an upper end. This is always a great way to start the morning. It's very, very, if you follow these rules of the breakout and then the open strategy. I say rule, it's a strategy. You can do whatever you want to do. I mean, wow, I didn't get that one. That would have been another one to get right there. I was talking, but I could have jumped in and grabbed that and got out again, and I didn't do it. It's a lot of green right there. It's a little scary. Yeah, I'd like to see this where it turned around. I'd like to see this break again on a red candle, and then I'd think about getting in right there. So let's see that 34.13. Is it going to do it? It's got to be a red candle. Wow, it's doing it, isn't it? There's 34.05. I don't know. See how the seller's action went down here? It just kind of just made me pause for just a split second when I saw that volume dropping and not even getting to the top of that and the scalping indicator. It's still a downward move. I guess I don't want to get caught in a big swing up and then lose $300 or $400 because I got too greedy. So I'm waiting for a little bit better setup right now. According to the strategy, you could have taken that, but you couldn't get out till here. So you'd actually be in a potential losing trade right now if you got in that. This one I could have profited at. I really didn't. I was kind of like deciding whether I was going to keep trading. And I'm still thinking that because that could have stung me right here. I mean, I could still be holding it. Theoretically, the strategy says hold it halfway up the previous candle, which is of the body, which is like right here. So I would have had to get out of that trade. So then you'd look at this one and get out. So that probably would have shook me out for sure right there if I was in that trade. Look at that. See, now I'm more worried about going in. And I need to see a good solid break here of this level. If it comes down through the fib, yeah, and breaks that. If it turns around here and comes down, I would be more inclined to go in, guys. I think it's still going to go down. I just don't. I want to get the right move. I am getting ready, though. It's got about 20 seconds to form a new candle now. See if we can break over 1,000, make it like 1,100 here. It's a good way. Now, my goal is 5,000 a day by doing various strategies. The open strategy, the RV strategy usually gets me that and more. And then I will round off the day with the power hour if I have to. And I do miss days on occasion because I do have another life that I have to do stuff with. But I'm going to go in right there. 407. Yeah. So the first level was right there, but that's only $32. Oh, is it going to shake me out again? See, this is why I stepped away a minute ago. I should have just kept my money. I'm getting ready to get out. I don't want to see that go too high here. Is it going to break that fib? We don't want it to break that fib. 134.30 would be my area where I would think I've made a bad decision here. So let's just see. Nope. Good. Hit me back down again. So 133.85 would be one level to get out. It's using that 134.13 as sort of a flat top now. Yeah, it kind of made its big move. See how it's consolidating? I'm done with this. So let me just see if I can get out green here. It's made its big move down. So as far as the open goes, I'm feeling pretty done with it. There we go. See if we can get down into the 133.80-ish area here. At least want to break 1,000. I got back in to break 1,000. I'm going to take that, 1,019. It hit 75. I missed it. I don't know what I got that at, but we did break 1,000. I broke 1,000. Maybe he's doing pretty good there. So, okay, guys, that's it. That is the open strategy. I hope that was exciting for you. Please remember to follow my advice and trade in a simulator before you copy this, and look at all the links and stay inquisitive out there and go green, and I will see you next time.